We have some trade numbers set to come out at some point this morning. Let's talk about this market and where we go from here amidst, of course, some doubts over the short-term path of the market. Our next guest actually doesn't believe a speculative frenzy exists in the Chinese stock market, even as the rally there resumed on Friday. Let's bring in Hao Hong, managing partner and CIO at Lotus Asset Management. Yeah, so it's lay the case out for us.
Yeah, well, I think it's way too early to be worrying about speculative frenzy. But if you look at many of the trading statistics, for example, turnover ratio, right? So it's about 2 to 3 trillion yuan per day. It is at the similar, on the absolute terms, it's at the similar level as 2015. But then if you compare to the free flow market cap, right, so it's like less than half of what it was in 2015, right? So that is showing you that actually trading volume can surge substantially higher from here. So it can actually double if we are entering into a bubbly phase. So I think that would be one of the measures that I'll be looking at. And I think secondly, people start to worry about the margin trading activities. So margin trading total volume is about 2 to 3 trillion as well. But then once again, you're in a substantially larger market. Right? So I don't think there's much to be worried about. And also in 2015, by the way, there was a lot of OTC leveraging. Right? So remember, there was umbrella trusts. Right? So people can use an app on their mobile phone to get a margin loan. And also, there are other activities, people actually borrowing from non-broking companies. So those companies' margin trading activities is actually not in the CSRC database, and therefore it's not showing 2-3 trillion yuan number here. But since then, all of this has been outlawed, and therefore, I would say that we're now still in a relatively early stage of a bull market.
Okay, so in terms of this rally, how much more do you think we can go, and for how long?
Yeah, well, I think, if we do it properly, right, so if we don't hastily trying to kill the bull in its infancy, we can go substantially higher from here.
It doesn't mean because we're not seeing signs of a frenzy, it doesn't mean valuations haven't moved up slightly. Are you concerned over valuations at this point? And if so, where?
Yeah, well, I think overall we're actually seeing valuation at the long-term average for the overall market. All right, so that's not a cause of concern. But then at the same time, in some pockets of the market, there are some sort of very speculative activities going on. For example, some of the semiconductors company is trading at 6,000 times PE. But then, if you look closely to the financial statements, many of these companies, they are trading at a very high multiple is because they turned profitable this year.
They just turned profitable.
Yeah, so from a loss-making company into a profitable company. So I would say that, at this very early stage, the earnings per share for these companies are very small, and therefore they're showing up at a very expensive earnings multiple. But then if you look at many of the U.S. tech companies are the same, right? So, back in 2000, Amazon has no earnings. And many of the big tech companies right now, who is, over $1 trillion market cap, back then there's no earnings, right? So if you try to calculate earnings at this very early stage of the growth phase for these companies, it would inevitably showing up very, very expensive.
You've been also talking about what's been going on, these small caps, as you say, right? There's right. Quite a bit of rally going on here.
Yes.
What do you think is driving that?
I think small cap in general is doing very well this year. It's substantially outperforming, especially if you're looking at the CXO, the drug companies, the semiconductor companies, and also some of the tech companies, the robotic companies, for example. They're doing exceedingly well this year. And I think, there's one of the very popular alpha strategy that the hedge fund industry is engaged in, which is basically along a portfolio of good quality, high growth companies, and then they short the small cap index futures. And so, in so doing, they were able to capture the alpha of a portfolio of small cap companies. Now, such a strategy, inevitably, the result is that you're seeing price momentum in many of the small names just continue to go up, because everybody crowds in, everybody's sort of engaged in a similar strategy. It could create fragility in the system, but I would say that, since early 2024, there was an episode where you have a Quanquick, right? So many of the small cap companies just collapsed, and that washed out a lot of hedge funds back then. I think since then, after more than a year, we should have learned some lessons from that episode, and regulators could be substantially more clever this time.
Okay. Align everything for us a little bit here as well. It's interesting, too, because everyone's talking about, if we do see this stock rally continue, which Hao Hong says we can for some time, I think he said 3 to 6 months is easily attainable here right now. What does this mean when it comes to how policymakers are going to react to monetary policy, for example? Does it in some ways delay the impact of cuts or triple R cuts and the like here because of the narrative here that possibly this rally is liquidity driven?
Yeah, a further rate cut might even engender further speculative spirits in the markets. And some of the economists have in fact weighed in specifically on this very issue and whether or not we should actually connect the two stories together and whether or not economic policy then goes then to affect market policy with of course, connecting strand there would be low interest rates. But yeah, let's get a sense from Hao Hong.
Yeah, Hao Hong, managing partner and CIO at Lotus Asset Management. Yeah, do you think those two things are related? What this equity market does and whether PBOC is going to be doing anything later on this year?
No, I think more likely than not they're going to continue to cut interest rate, because there's no inflationary pressure in China, right? So indeed, we're still fighting with deflation. So I wouldn't be surprised to see interest rate cut and also triple R cut towards the end of the year.
I mean, I'm glad you brought up the lack of inflation. So I'm just going to mention stock names, and you can chime in on the stock names itself, right? So what's happened recently is market leaders have started to underperform. So BYD in EVs, Meituan in food delivery.
Yeah.
And the market strategy of buying the leader doesn't seem to be working out because they think that perhaps they won't fare as well during this fierce competition. Well, do you think the market is getting this one right? Or is it time to then get back into these market leaders? I think Meituan's almost about to take out 100. BYD's almost about to take out 100. Just your thoughts on that strategy.
Yeah, well, I think, right now people are really looking in the new growth sectors in the economy, right? So if you look at, if you're focusing your portfolio on the old parts of the economy, which is, property, baiju, that kind of stuff, right? So it's not going to give you good return in this market. And also, before this rally, people were buying bonds, for example, because bond use has been declining for 4 years in a row. It's been a huge bull market for the bond managers. And now, people start to realize that because of the government's policy pivot, that, we're going to fight deflation rather than tolerate deflation. Right? So there's a mindset change, and therefore, people should tilt their portfolio towards reflationary assets rather than the old guys.
Is the jury still out, though, on whether this is, this anti-involution sort of campaign is going to be reflationary?
The intention is to reflate the economy, but then whether you can be successful or not depends on how you can sort of rescue the property price from continue to fall. And I think in July we're still seeing a falling property price across the board, but I think the momentum, the speed is actually slowing down. So we're seeing some initial results of that.
Okay.
Yeah, I think we've been talking about this for some time, whether the equity market, and I think we partially answered the question, can sustain its rally amidst low inflation and property prices remaining subdued. And where do you think the earnings story is going to come from eventually here?
Yeah, if you look at the overall market earnings, right, so it's growing at like 2%. It's anemic, and mostly because the big banks are still generating very low single-digit earnings growth, and also many of the traditional names, they are very low single-digit growth names as well. But then if you look beyond this old part of the economy, right, so if you look at semis, drugs companies we discussed just now, they're having like 200% earnings growth. Right, so Capricorn is turning from profitless to a profitable company, and many of the drug companies, Labubu is seeing 300 times EPS growth as well. So I think these are the sectors we didn't have before, right? These are the sectors that we didn't believe. Now that for some reason this cycle, these sectors are turning around. There's a paradigm shift from a profitless company becoming a profitable company, and therefore people are willing to pay up for these companies, and I think they should continue to perform.
Yeah, I'm glad you mentioned Capricorn. This is a name that not a lot of people, in fact, had heard of and knew how to spell going into 3 weeks ago. Now it's on everyone's
That's right.
mind. And so the reason I ask you that is NVIDIA in China, that theme. What do you think is the closest thing to NVIDIA? in China?
Yeah, I think people think that Capricorn is the Chinese NVIDIA for now, because now Capricorn is only having less than 5%. I think like 3% market share in the chip industry in China. So people think that, wow, because the U.S. is forbidding China buying U.S. chips, and therefore you have to buy Capricorn. And therefore, it's going to take 100% of the market share. And therefore, the earnings are going to explode, et cetera, et cetera. Now, if you look at these companies, it's investing like less than 1 billion yuan in R&D, right? So it's like substantially less than whatever company you can come up with, right? Even the Baidu company put in more
R&D
than that. Yeah, more than that. So I would say that, it's a very odd company, right? So, but the story is just very good, right? It's been around for 10 years, and for the longest time it has been, when the market goes up, it tends to be the darling of the traders for some reason. People love trading these stocks, but of course we haven't seen this kind of surge for a long time now. Right. So I think some of the brokers, I think Goldman was putting at like 2,000 yuan price target.
Upside.
And there could be a chance, because, as the market goes up, people will come back to this name.
In terms of potential catalysts, what are you looking at for the next few months?
I would say that people are starting to come around to this reflation idea.
Okay.
Property price stop falling so fast, right? So sort of stabilize a little bit, and then once the Fed start cutting, then we start cutting interest rate and also triple R, and then people start to believe the bull market story, because this is a bull market that we've been waiting for 10 years. Right? So the last bull market we had was in 2015, right? So back then it was at 5,000 points, and I think in the previous bull market before 2015 was in 2005. So each of the 10 years you have a bull market. It's quite interesting. So it's 10 years in the making, and let's hope that this time we get a truly bull market rather than a technical rebound.
Okay, yeah.